Should traders and investors expect more of the same in April that they saw in March?
Obviously, we had a nice rally coming into quarter, but the technical levels, some of the big resistance levels, a lot of people watching what's a 0.382 retracement, Fibonacci retracement. In the market, the S&P really just stopped on a dime right in front of that resistance level. We're already seeing a retreat here, first day of the month. Obviously, a lot of people attributed rebalancing, front running of that rebalancing as a tailwind that helped lift the market. A lot of liquidity from central banks. But that narrative first day of the month, seems to be dying out here. I'm looking on further weakness. If we get below about 2380, 2400 in the S&P, I think we could start to see some cascaded selling from there. So keeping an eye and keeping a pulse on that. Obviously, a lot of weakness coming from overseas, too. Crude oil hanging at $20. Definitely something there to keep a pulse on, too.
So, Bill, you mentioned things like Fibonacci retracement levels. In essence, we're talking about levels and statistical benchmarks that traders look at to measure things like perhaps moves, measured moves, momentum, that sort of thing. All of those, is it safe to say that those particular types of levels are what's driving action, or is it still just the renewed uncertainty about what the path of the coronavirus is in the U.S. and the global economy?
Absolutely. I think you have to credit some of these levels right now as volatility picks up in the markets. I mean, there's more uncertainty. It's feeding on itself, the uncertainty and the volatility. I think a lot of people, whether you may have more of a fundamental backdrop on your trading or investing, or just simply more technical, a lot of people are beginning to lean on some of the technical levels. Algos are driving up those technical levels, so I think that becomes more relevant here in a market like this. But still, it doesn't mean that the entire market needs to follow off of that. I think people also want to keep a pulse on there are things to keep in a portfolio. Yesterday, we cut all REITs in our portfolios for the time being. So there's different things you want to kind of focus on, and that's where I think that narrative looking into the first of the month, where in April are you going to start to see tightening? Where are all these bills going to be paid? What parts of the economy start to drop out in the near term? So I think those are a lot of the questions that people are looking to get answered here in the near term.